Well, we do want to help you get your finances in check this year, and a big part of that is prioritizing your credit score. So Lina Evans with Bank of America is here. You're kind of going to help us walk through some steps to make sure we reach our financial goals in 2023. This really is a good time to go ahead and take a look at where you stand and how you can improve, right?
That's right. It's the beginning of the year. I got note cards to make sure we get our steps correct. We got to get on track. That's right.
And it's something you recommend that people do every year, not
absolutely.
Just... Okay.
Yep, absolutely. Ongoing. So there are 7 steps that you can take to assess your current financial situation and really get yourself prepared moving forward. Look at what's going on today and what's ahead for you down the road, right?
Okay, yeah.
So number 1, understand your assets and your liabilities. Assets are going to be cash, savings, retirement. Your liabilities are going to be credit card debt, any loans, any mortgage. This will give you an overall financial picture, which is really, really, really important, right?
Okay.
Then determine your goals. You want to look at your short, your mid, and your long-term goals. How are you tracking towards them? Are they still relevant? Do you need to maybe change your goals? And most importantly, how much do they cost?
Can you give us an example of like what is a short-term goal versus a long-term goal?
You know, a good short-term goal is going to be something like paying off more than the minimum payment on your credit card every single month. You know, a long-term goal, a midterm goal is going to be, you know, really attacking that credit score, and then a long-term goal is something like, you know, planning a dream vacation or saving for a home.
Okay, yeah. And the credit score is something we're going to talk a little bit more in depth as well. Yes. But you've got some more steps listed out.
Yes, we got 7.
Okay,
right.
So we're just getting started, folks.
A couple more. So you also want to make sure that you're managing your taxes. Ensure that you have what you need set aside in advance of this year's April 18th. Everybody,
keep
April
that
18th
in mind.
Deadline
Yes.
This year. Yep. You also want to check your investments and your goals and make sure that they are in line and align for your age and for your financial situation currently. Okay. So it's really important. Make sure you look at that. And then this one is really important and easy to forget. Check your beneficiaries. Make sure that those are still appropriate every single year as well. Which kind of leads me into the next one. You also want to look at your insurance coverage. Is it appropriate? Is it the right amounts? You're looking at your homeowner's insurance, your renter's insurance, any jewelry, that kind of thing as well.
Okay.
And then finally, like you said, check your credit score, right? And this is a little bit daunting to do, but it is the biggest and most important thing that you can do. It will give you an overall financial picture. And think of it as like, you know, sort of your before and after of any fitness goal. And we're getting financially fit, right? So looking at your credit score is going to give you the before photograph for this venture.
Okay, so let's say you've got these 7 steps, you've taken a look at your goals, you know what they are. In the long run, what can you kind of do to make sure you stay ahead of your finances? you're
really going to want to start with looking at your credit score, right? So your credit score credit scores range from 300 to 850, right?
Sure.
They can change monthly based on your habits and anything that you do.
Sure.
So it's really going to start there, and your credit score is a number that helps lenders see how well you manage your financial obligations, which is part of all of your goal setting, which is part of all of the 7 steps.
Okay, and so what do you recommend people do to improve their credit score?
That's a tough one. So, because there's a lot of things, but most importantly, so your credit score, the 2 biggest factors are your payment history and the amount that you owe. So really important, pay your bill on time every single time. At the very least, make the minimum payment by the due date. If you can, it's always great. Maybe pay off your bill in full every single month. Sure. That would be really great if you can. And that's really going to be key to really watching how that credit score can decline and frees you up to do some other things.
Okay, and so when you say make that minimum payment, sometimes even just a little bit more than a minimum payment can help. It doesn't have to be a huge amount, right?
And that is a great short-term goal. It really doesn't have to be. If you can look at what your interest rate is and how much interest you're charged every single month and sort of make that minimum payment plus that amount of interest, that will be really, really, really beneficial for you as well. Yeah.
Okay. How can people actually access their credit report? I think that's something that a lot of people don't know.
It's super easy. If you do online banking with any of your financial institution, I don't know any financial institution that doesn't give you access to it right there. Super easy credit report. Look at it at least once a year. If you are really trying to attack some financial stuff, look at it every month. Look at it every couple of weeks. You know, look at it every time you have used your credit or are about to use your credit.
Got it.
That one's really, really important.
Okay, Lina, thank you so much. That's all the time we have. I mean, I know there's so many different facets to this. We can stay and talk all day long. You'll hopefully be back on to talk a little bit more about finances as well, but we're going to go ahead and take a short break, and we'll be right back, everyone.